Welcome to the Dividend Talk podcast, episode 176, a fire chat conversation about personal finance and dividend growth investing. Dividend Talk is your number one podcast for all things dividend and stock market related with a unique European flavour. My name is Derek from Engineer My Freedom, and I'm joined with my co-host, European DGI. If you want to learn more about us, please visit europeandgi.com, where we have articles on dividend growth investing, including 30 European dividend aristocrats. While you're there, you might as well grab our free dividend portfolio tracker template. We also offer a premium dividend growth service featuring a bi-weekly newsletter, which includes stock deep dives, dividend stock cards, and access to our dashboard with over 130 dividend growth stocks. All of this is based on our very own dividend safety analysis. But enough about that. Please grab a cup of coffee and let's get started. Hey, European DJ. It's Christmas time. It's Christmas time. I love this time of year.
Definitely. I'm already looking forward for the package, the boxes below the tree. Of course, not for others, but for myself. It's that time of the year that we give a lot, but hopefully we also get something nice in return besides dividends.
Yes, dividends is quite nice, but as you said, it's the time of year for giving. It's the time of year for getting sometimes. But honestly, like for me, it's just about chilling out, relaxing, spending time with family, and sometimes not even having a plan, just not day to day, just being able to wake up in the morning and say, let's do this today, let's chill out, let's watch movies. Like yesterday, I finished work early. I came home and I sat down with my son and I watched two Christmas movies. I don't think I sat down and watched two movies with him all year. And he just sat down, he cuddled into me. He's 11, but he got a blanket, he cuddled into me. We had some hot chocolate.
Nice.
That's what it's all about. And I think that's the inspiration for our show today. We're going to have a little bit of a deep conversation. Sometimes we don't get too deep. We like to joke around a bit, but I'm quite looking forward to seeing what's in your mind when it comes to personal finance and, of course, DGI.
Yeah, definitely. And I mean, it's so relatable to what you say. Like, this is the time that we don't need to do anything, but we can only do the stuff we want, right? Of course, we have some family obligations. For some people, they are looking forward to it. Other people are thinking like, well, oh my bloody hell. I guess it really depends on whether you like your mother-in-law or not. But generally speaking, for me, this is all good. I'm really looking forward to see my family. I haven't seen them for ages. Just been too busy, and they live mostly on distance. So really time for this. And look, I don't know what you do, but sometimes I also sneak out during the Christmas days and just listen to a podcast. Of course, I don't listen to our own again because I know already what we're saying, but there are so many good podcasts around there. And for me, it's also always something special, like reading a book or something like that, or doing a podcast. So very looking forward to what's coming. And I'm now drinking my nice winter tea here with some honey in it, so I'm really prepared for this deep fire chat conversation here. But maybe before we start with that, like next week on Saturday morning, 10 a.m. UK time, GMT, or Irish time, or 11 a.m. let's say the rest of Western Europe time, CET, we will be doing a live show. Yeah, so people can sign up. We'll put the link in the description of this podcast. It's a G form. You can sign up, and we will send you an invite, and you can join the show live. You can ask your questions live. It will be all in the spirit of looking backwards on 2023, maybe our learnings, how our investments were doing and such. So actually we want to probably ask you also some questions. So if you want to take the opportunity to join the show live, then hey, let us know, sign up and join us on Saturday morning next week.
Yeah. So I think we have a little bit of a different format today. We're not going to do the news of the week. We'll do that maybe next week. We might look back at the news of the year. So we might jump straight in to the main topic. And look, we're better to start. You've been on this journey a little bit longer than I have, which sometimes is an inspiration to me because I can see where on the curve I am in relation to where you are and where you are. But when you look back, what are you most proud of? What's the best? Yeah, what are you most proud of?
For the entire journey, right? I mean, look, I'm now realizing more and more at the stage where I am. I'm still not financially independent as such, but I don't have any stress anymore about money. Sometimes I just don't know what to do with the cash. Yeah, because it is really the power of compounding. And for me, I'm probably going to be, from my direct relatives, probably to be the first millionaire in the family. Yeah, or even in my whole circle of friends. And you need to know that I come probably from the furthest compared to others.
Yeah,
And this is something that is so special. And the only thing is that I discovered personal finance in the sense of like spend less than you earn and invest the rest. It's really that mindset while still being happy, because
yeah,
I haven't given in on happiness, which is also very interesting, right? I just stopped to being consumer. I benefit from my investing from consumerism. So I would, of course, encourage everyone to overpay for stuff and specifically for the holdings that I have. But myself, I'm not participating anymore in it as such. And I'm really, it's not like I'm eating white bread only with butter
yeah,
every day. It's not like I don't drive a normal car. I just drive now an older car because I'll drive it almost to the end instead of buying every 3-4 years a new car, which I was used to doing, right?
yeah,
Because why not? This is the middle class life we are supposed to live.
yeah.
So for me, being at the stage where money is just not a problem anymore, nothing to worry for, I can buy almost everything out of pocket. That is for me like already a level of freedom which I could only dream of. I would have, if you asked me like 15-20 years ago, I would have thought you just work till you die. Yeah.
Is the millionaire comment really triggered me there, and it's quite a funny thing because that has such a status behind it, doesn't it? Everybody wants to be a millionaire, and once you get to a million, I suppose those with a million probably want to move on. But you said you'd probably be the first in relatives and family to make that step. Was that a motivating factor for you? Did you think about that when you sat down and thought about investing in the beginning?
No, not at all.
Never,
Not at all. Never.
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 Because I have to say, that is something I had, and I flick back over and I keep all my goals over the years. And before I started investing, maybe a year or two before that, I had put that I'd be a millionaire before I'm 45
Yeah.
on that. And I wouldn't say it was a motivating factor, but it was just a target or a goal that I had just put there. Just I had something to reach. I wanted, because like you, I would be the first millionaire within my
Friends and family.
immediate
Yeah.
family.
Yeah.
I
Yeah.
would be the first millionaire there. So to me, that would be something, a significant milestone, particularly when I don't have, let's say, like the highest paying job. I'm not earning 200,000 or 300,000
Exactly.
a
No
year.
inheritance.
It just, as you said, middle class, just working hard to it. So to me, that would be an achievement, and it was a stepping stone to yeah, it's pretty much a goal that I would like to aim and achieve for. So yeah,
Yeah.
it was interesting to hear you say that.
Yeah, yeah. I mean, I just realized that this year somewhere when I was just doing my ISIT, my forecasting based on the compounding that's happening, and I felt like, oh my god, if I will do this, I will become a millionaire. I never really realized it because millionaire for me has always been considered unachievable.
Yeah,
That's something for the people that start a business, become very successful, and therefore become a millionaire. And I never thought you can get there via working, and I'm still far away from that, right? But if I stay healthy, I will achieve this in my life. Yeah, and that's, and even let's say inflation adjusted, right? I will achieve that with the compounding if I don't do anything stupid and continue on the path I am. And for me, this like beyond my imagination.
Yeah.
I never considered there. And I'm not talking here about an illiquid millionaire and about having money in your house and your house grows value. I'm not talking about net worth. I'm talking about short-term cash and equivalents, which is effectively our portfolio and things we have on the bank.
Yeah.
Yeah, I'm quite confident that will get there. The only thing I need to focus on is health. Yeah, make sure that I stay healthy, that I invest in that, and both mentally and physically. So far, so good. But it takes an effort to be in shape and to
Yeah.
stay in shape, right? But never had it as a goal, honestly.
Okay.
My goal was just like um, a need for freedom to be able to make my own decisions. And honestly, I've got so far over the last 10 years, I only had great bosses that I loved working for. So I never had the feeling that I was missing something at work or something like that, because within the context that I need to work, I've got it really, really good.
Yeah.
But for me, more is like the freedom of choice, like how I spend my day. And I will never stop working from that point of view. It's in me to always create something. But that freedom of choice is what I was needing, not waking up for someone else, but because I want this preliminary. Maybe start a business. I'm very risk averse. Maybe start a business like a low cash business that I can do, but I wouldn't need to make a profit or
Yeah.
something like that.
So then how do you define, like what you said is great. I mean, in terms of financially free and not having to work for someone else, but you do, okay, and I do. So how do you define success? What is success? What does it mean to you to be successful in this?
So effectively, am I feeling more free over time? And I do. I started this saying like, okay, sometimes I'm getting so much cash in that I don't know what to do with it at sense other than investing. Yeah, because now the dividends are coming in. I'm having already a savings rate of 50% or something like that. So on top of that, the dividends coming in. So you just know that you can pay for almost everything out of pocket. In the past, I had to save up for a holiday. Yeah, now I just pay for it and just out of cash straight away. So this is this is luxury, this is privilege. I worked hard for it. Yeah, and so it's not privilege in the sense of like I got it with a silver spoon or something like that. No, but it's a situation you are in that you can afford many things without the sacrifices that you need to make, because I made those sacrifices in the past. I'm now plucking the fruits literally from it. So that's for me a sign of success. I just don't worry about money.
Yeah. And has that changed over time? If you look back 5 years ago, was your definition of success the same?
Um, 5 years ago. 5 years ago, I was probably more focused on getting the snowball started properly. Yeah, and making sure that I'm consistent, disciplined, making sure that I've got my cost under control, my spending under control, making sure I sit. Also, that I raise my kids in such a manner. I think that's where my focus was more. But at a certain moment, you tick those boxes off. Yeah, there. So yes, the snowball started running, and it is true what they say. This psychological barrier is around 100K, because suddenly you're getting around 250 euro to 300 dividends coming in each month, pre-tax. So after tax, maybe let's say 200 euros. But this 200 euro that you're getting, it's not like for Europeans like 200 euro each month. But for instance, 500-600 euro in May. And when you realize how much money that is, it starts to click, right? And then you really, the 100K is really this psychological barrier. And then you start to shift your thinking already. Okay, done that.
Yeah.
Kind of. The snowball starts running. And then it becomes the feeling of the marathon.
Yeah.
Yeah. So at that time, you're still like warming up. And it's a really long lead. It's your training for the marathon. Yeah, until the 100K. But then once the 100K starts, it's the marathon, because I'm now in the mid of things, of the journey. And this mid of the journey is by many people considered the boring journey. Yeah, where you start to maybe drift from your goal or something like that. And I think this is where I often hear people in the community talking about it, the boring mid here. And I see that, but my longing for financial freedom is so much stronger that I'm just continuing to be so-called laser focused. on this one.
Yes, we got. That's number one. Let's see how many times we'll say that. Um, but yeah, it's such an interesting concept. You talk about the 100K, and I have my eyes firmly set on that. It's a barrier I want to break. And I think
How far off are you?
roughly, I'm nearly there. I'm nearly there.
Yeah.
So this year was quite a strange year. So at the beginning of the year, I would have thought I was going to get closer than what I was going to get, but it felt like every time I was investing money, the market was going down. So
Yeah.
overall, I wasn't going anywhere. And then all
Yeah.
of a sudden, we've had December, and it's like popped, and
Yeah.
I'm closer to it now. I think I'm 90K or something like that. So
Yes.
it's close. But for the whole year, I was looking. It was like I was putting in money.
Yeah.
It was either staying the same or going down. Staying
Yeah.
the same or going down. It was never going up. So it was it was funny when I looked at it. When did we have? We had two really good days in a row, and I looked at my portfolio. It's like, oh wow, I'm actually getting closer than what
Nice.
I'm thinking, because your portfolio starts to recover. But on one side, all year we've been saying the stock market's down. It's great. It's great. It's great. But then
Yeah.
when you have this goal of reaching a figure like 100K, you don't want the stock market to be down. So it's like polar opposites. Like
Yeah.
against each
Yeah.
other.
Yeah.
So
And but from that point of view, right? What are you most proud on if you look at the entire journey so far?
yeah, it's like to me, it's something similar to what you have. So I remember, and I think I've told this story before, but I remember a point in my adult life where I relied on my brother, who's younger than me, and I'm going to say, because he's not listening, not as smart as me. No, but I relied on him one year for Christmas. He had to help me with money. He had to give me
Uh-huh.
cash, and I had to buy presents, and he did that, and he never asked for anything in return ever. Obviously, as a proud man, that hurt me a lot. It took quite a lot to ask for the money, and then you have this
Yeah.
deep regret and guilt, and I mean, it was just before my kids, before I found out Jean, my wife, was pregnant with my first child. So it was just around that time. So it, I had to take a step back and think, what do I want? And I always said to myself, I'm never going to let myself get into that position again. I'm never
Mhm.
going to be in a situation where I depend on money or depend on someone else for money. And I think that's something I'm most proud of. Like as what you say, I don't usually check my bank account. I know what comes in and what goes out, but I don't usually have to check, because I'm not worried, because there's always something there. So if something comes up, like dishwasher goes, or we want to book a holiday on the spot, we do that. So I booked Vegas. I booked Vegas next year. So I paid for it. I paid for me. I paid for my wife, but I paid for
Yeah.
two other people. Now they were going to pay me back, but they just didn't have the money when it was going. But I could do that in the knowledge that I have a buffer there, and that's what I'm proud of. That I've worked so hard to deliver that. And honestly, seeing them dividends come in, I'm past the €4,000 a year.
Yeah.
That's mind blowing for me. €4,000
Yeah.
a year in dividends is something I never would have thought, even when I started in 2017, that I would have
Yeah.
got that amount.
Hey, and then what is interesting, right? That period that you mentioned that you had to borrow money from your brother, it must have been tough for your wife as well, right? So, how do your wife and brother look back at you at that time?
Yeah, I mean, it was so hard. So at the time, she wasn't my wife; she was my girlfriend. So I tried to hide a
So it
lot.
wasn't decided yet.
Yeah, I tried to hide a lot, and we weren't even moved in together at the time. We're in
Yeah.
the process, and to be honest with you, I was working at the time. I was working in was electrician. I was earning lots and lots of money, more money probably. If I was to look back at it, more money than what I was earning maybe 2 years ago. I was
Yeah.
earning as 18, 19, 20. I
Yeah.
was electrician. There was loads of money. We had this boom in Ireland. I was
Yeah.
doing mixers. So earning money wasn't the problem. It was what I was doing with the money, and
hmm
I just left it go. I went out and bought a Jeep, a Land Rover. Honestly, I looked about 12, right? And I was in this big Land Rover. I had no business, but I spent 60K on that and put it on finance for
Yeah.
just for show, so it was them kind of decisions. But my wife has gained a lot of trust, and she trusts me with these decisions because she know what I went through, and she's
Yeah.
seen how I've been laser focused. Number two, on actually never allowing that to happen. And honestly, that's been my single goal since then, was to never allow myself to rely on everyone else.
Yeah.
And I push that with my wife. I say, look, she started investing this year. She started a pension, though she never had. She goes, I don't need to. You're doing it. But I said, what if something
Yeah.
happens to me? What if we don't work out? What if this? You need to not rely on someone else. Don't make the same mistake I did. And to her credit, she's a quick learner. She listened and she started investing this year, which is also something I'm quite proud of.
Yeah, I should add that to my wish list and goal list, because my wife is also a bit hands off there, and yeah, I need to work on that. Yeah,
Yeah,
you
yeah.
should. What was the book again that you mentioned bought for your wife?
Oh, there was a couple of books. So
The
the
one
first,
with the buckets
yeah,
you spoke about.
barefoot investor.
Barefoot Investor.
Yeah.
Okay, I'm going to buy my wife that.
Now it's very Australian in terms of it's an
Yeah,
Australian book, but the concepts behind it I think are very good. And to my wife's credit, she speaks to her friends about this all the time. She has this Revolut app, and she does have the buckets in a Revolut app, and you can
yeah.
see it. And she actively manages this and works with this, and it's really helped her. I have to say, it's really
And
helped
is
her.
that the book that inspired her the most to get started?
Yeah, yeah, yeah.
Yeah. Okay.
Because honestly, it is so easy to read. You don't have to be. You don't have to understand. Like you don't have. She doesn't. She used to say, "I don't have the brain for this. I can't understand this." And I said,
Yeah.
"Read this book. It is just so easy to follow. It's
Yeah.
worth reading." And yeah, it's been her biggest inspiration.
Yeah. And then like that was then right when you get started, what you're most proud on. But how is it for you during the journey? Have things shifted in your thinking, like your definition of success? Yeah.
Yeah. So in the beginning, as I said, I was laser focused. Number three on that millionaire status, and honestly, I want that. And I actually looked at some of them other goals that I had. I wanted to buy a Jaguar, not because it was how would I describe it? Based because Jaguars are not middle class, don't tend to drive them around where I'm from.
Yeah.
It's kind of a status thing. But I wanted
Yeah.
to be able to afford something like that, and I had the exact model I wanted
Yeah.
to buy and all that. But obviously, I have shifted from that since then over time. Honestly, the material stuff I don't give two hoots about.
Yeah.
All that is gone. My biggest thing, like you, is being able to have the freedom of choice, being able to you to work if I really want to, I won't. But also with my kids, I want them to be set up in a way where I don't want them to work in a factory like I'm working. And
Yeah.
that's the biggest thing. I don't, because it's okay. I'm an engineer and I enjoy what I do, but there's people that are not engineers. They're what you call operators, and
Yeah.
they click a button every 2 seconds. Or they're moving something from here to there, and it's such a job that they get paid probably the same amount as I do, but it's just so mind numbing. And I don't want my
Yeah.
kids to have that. I want them to want to make a difference. I want them to trust themselves. I think we lose that in ourselves. We work for someone else because we don't trust
Yeah.
in ourselves, and that's my goal is to teach them, show them that I can do it, earning not a high amount of money, and then give them the confidence to build their own success off
Yeah.
that.
For me, this has been this year often in my mind. It's probably one of the topics that kept my mind a lot busy. Like, how do I raise my kids in a proper way so that they appreciate things in life, that they didn't get things like a silver spoon, that
Yeah,
they build character,
yeah,
because I see a lot in society, mental health related issues. And I sometimes feel like that kids nowadays have it tough. Yeah, with all that is around them. Yeah, let's say. So how do you build character? How do you teach them financial discipline? How do you teach them to appreciate the little things and
yeah.
don't take things for granted? I haven't got it figured it out. I find it really, really difficult.
That's that.
I'm now talking with my son a lot about Revolut.
Yeah,
He wants a PlayStation 5. He says, like, Father, it's so difficult for me to save. And how do you, for instance, not buy this bag of chips when you're in the shop? Because I know you love chips, right?
yeah,
And I must say, just honestly, I don't know. I just avoid going to the shop and going through that aisle to do this, but I don't have the answer for him either, as such, right? So
such a
it's
hard.
so difficult.
Yes, it's such a hard question. I've got two boys, and they're polar opposites in that respect. One of
Yeah.
them, one of them is can save. He can put his money away. He can go into a shop and not. Actually, what he'll do is he'll buy something for you and for me. He not buy it for
Yeah.
himself.
That's my daughter. Yeah.
And he's like that. Whereas the other guy, he would buy it for him and forget about us, and he just
Yeah.
can't save and like they're
Exactly.
completely different. And I get what you're saying. For me, the appreciation of little things and not expecting everything to be handed on is one of the
Yeah.
biggest things I have, and I can't help them with appreciation of the little things, but with the other stuff I can. So how I do that
Yeah.
is they want FIFA. It's
Yeah.
not their birthday. It's not Christmas. You can have
Yeah.
FIFA, but you're buying it. I'm not buying it. And
Exactly.
they have savings, and
Yeah.
if they really want something, they'll buy it. And if they don't have
Yeah.
the money, they just have to wait.
Yeah. So my son would, let's say, only do something until he has the money saved for that game, and then he will not save again.
Yeah,
So, but he's still young. It's a journey, right? But this will be a difficult one. But it also sometimes triggers my thinking, like, okay, you know what? Once I will be at the age of needing to hand over my portfolio, to which of the two kids do you give the management away, right? Of the portfolio,
yeah.
or do you do inheritance? It's still a bit early, but those thoughts start coming to my mind now and then. And do you have something similar?
No, not in terms of who's going to manage my portfolio, because we've given them their own portfolio and they
Yeah.
manage that. So I imagine my portfolio, when the time comes, I will split it 50-50, two
Mm,
kids, and I don't know if they will take
yeah.
it out or what they will do with it,
Yeah.
but they will have their own portfolio.
Yeah.
Touch wood. I like
Yeah.
that long one.
Yeah, so I read, so one of the books, and maybe that's a little bridge to the next one, like that I reread today, was The Richest Man of Babylon. And the father here also kind of was teaching the son about how to deal with money, and to be able to manage the estate later. And the son squandered it all and had to earn it back in a few years, right? And then he was kind of able to prove himself to do that. So I guess this thinking is also a bit inspired by that book, that really triggered my thinking, like, okay, but I would love my kids when they are 20 or 25 to take control over my portfolio. Yeah, at least like for 20 or 30%. Think about it like Buffett, who is raising up the next CEO. Yeah, they need to have some money to manage. Yeah, if you keep it all with yourself, you don't teach them. So I would love them when they're in their early 20s, let's say, take 10 or 20% of the portfolio and teach them these lessons in life. I don't expect them to be having the same passion for it, but at least that they learn a bit the basics of money management here, and then make some choices and learn from it and have those learnings early.
Yeah. I think that's one of the reasons I've given them control over their own portfolio. I
Yeah,
don't make any decision. They ultimately, I try and guide them, but
yeah,
ultimately they will tell me what they want to buy. So I think it's important you make mistakes and you allow yourself to make a mistake, because if
yeah.
they feel like they have to be perfect or they have to manage your
Mhm.
portfolio, they might be scared to make a decision because, okay, my dad might be mad if I do this and I lose money. Whereas
Yeah,
when it's their own money, they might say, okay, let's do it. If they're wrong, they can look back. If they're right, they can pat themselves on the back.
yeah,
Yeah, I think that's one of the reasons I was so keen on getting them involved in having their own portfolio as soon as they
yeah.
showed a little bit of an interest.
Yeah, so they have a small portfolio, but they have no interest. So I'm just taking some money each year in there and then let it compound. I only opened the account around between Christmas and New Year,
Yeah,
because that's when I do the investment. So next week I will do again. We'll figure out what to buy, and then I don't open the account for a year. Yeah, that's typically how it goes.
and
But
it'll
yeah,
probably perform better than the rest of us.
I will check. I don't know. I don't know. But hey, speaking about books, like, is there any book or article that really you learned or read this year that you really felt like, oh, I learned something here or inspired me the most?
Yeah, this time of year, it's funny you mentioned at the start that it's a time to sit down and read a book, and I typically will this time of year because I will have time. I will start into January and I will keep it
Yeah,
up for as long as possible. But I notice February, March, April, then boom, my book
yeah,
reading goes down. But I have read a couple of books this year. One on valuation, one on about real estate investment trusts. But the one that I did like, and it's not that it taught me anything new, but it did like the income factor. We spoke about it before
yeah,
because not that it in itself is saying is successful, but what it shows is that there's many different ways of there's many ways of being an investor. But there's actually many ways of being a dividend and dividend growth investor as well. There's not
Yeah.
just one path to follow, and sometimes you can get pigeonholed into one particular way of doing
Mm.
things.
Yeah.
And there is other ways. So I did enjoy that book from that perspective. It did show me. Now, the only problem is you can read that and think I should be chasing high yield, and that could be a problem. But I
Yeah.
think there is wisdom in having, like, we have allocation strategies, but maybe an allocation strategy within your portfolio, within your
Yeah.
actual strategies as well. So that's something that I did like, and it was easy to read. I'm in the middle of reading a book about real estate investment trust, and honestly, that's been really helpful in terms of how to look at REITs, look at the different types of leases, what's on their balance sheet, but not only that, look at the types of companies they own. So you're looking at Vici or you're looking at
Yeah.
realty income. Actually, you have to think about who's renting from them, what state are they in, can they afford it, and lots of different things I've picked up that maybe I would have overlooked before. So,
Yeah. Yeah. Nice one.
uh,
Nice one.
how about you? Even a non-investing book, what?
So for me, it was The Richest Man in Babylon. I just didn't read it for many, many years, and reading it now again was very, very, very interesting. Very interesting because it's all about storytelling and specifically the relationships in there, and how people perceive certain people. That's what I really liked about this book, and I found it, yeah, inspirational. I mean, it's typically written in such a over the top storytelling way, so you need to
Yeah.
see through that a little bit. But no, that was definitely the book that triggered most of my thinking. And then if it's a non-financial book, is I read Andre Agassi's
Oh,
biography,
yeah.
the tennis player. Oh my God! I mean, what a he did everything, God forbid, I think, but also, I mean, the character, the emotion, the passion, the hate for the sport at the same time. I mean, it was so interesting to read a little bit how his mind worked, how he experienced being a professional tennis player, how his father was teaching him, and how this also turned into a hate for the sport for him. How he married this Brooks lady at the time as well. It was very, very interesting for me to read. I love such biographies about sport players because sport players are typically really operating on high performance, and there's so much to learn from them. But at the same time, those people that were your child heroes, you see that they also have weaknesses, and that makes it very relatable.
They're human. Like, I always
Yeah,
envisage sports, probably more football players. That's what I was into, but they're almost like superhuman. You feel like they get up in the morning, they play football, 12
yeah,
hours, they go home, they have dinner and go to bed, and that's what you think.
yeah,
But
yeah, yeah,
actually, when you read their book, it's something completely different. So it's
yeah.
that's a nice
Very
one.
gifted guy.
But I have to say, you triggered me earlier when you were talking about having so much cash. Sometimes you don't know what to do with it, and I've always wondered. Okay, so you have this, right? And I assume you're open with your wife, and she knows that you have this excess cash. You want to invest it, maybe. Like, how how do you manage? How do you balance that? If maybe your family want to spending on something else, and you want to
Yeah.
invest it, how do you manage that?
Well, I always say at home, it's not a democracy. So that doesn't work in a family, a democracy. You don't want your kids to decide about your money at that time, right? We just spoke about it. Now, generally speaking, I think, like, I mean, we go 4 times a year on holiday. Yeah. So it's so the balancing for me, I think we have a rich life like that. We do what we want to do. Although maybe a far trip, intercontinental, we want to do, but it's not so much about the money. It's more about the timing, the season, and being a parent, both working parents with a career, meaning like putting the extra effort in at times, plus 2 kids with lots of side activities. This is just a grind. These few years are the hardest because it's like you're living for others mostly as well,
Yeah,
in the sense of you wake up in the morning, you prepare the kids, bring them to school, you get quickly back to work. You put your effort in at work because you have also responsibility there that people depend on you. In my case, so you work your ass off during the day. Then when the day's done, the kids are being picked up. In the meanwhile, you bring them to sport activities afterwards, and before you know it, it's 9 p.m. in the evening. Yeah, and then your day starts
Yeah,
for yourself. But your wife also wants to talk, and then so I would say like there's not an issue with balancing with money, but it's just balancing time, and
yeah,
and and the money doesn't buy me time yet because it hasn't yet resulted in, for instance, working less. Maybe in the future, I don't see how I could do that right now in the work that I'm doing with the work we have ahead of us, and I like my work too much to make changes there.
yeah.
So if you need to work, you better have the nicest job in the world. If you need to work anyway, that's always my philosophy.
And how does your wife feel if you work? Does she feel you work too much? I mean, look, you go to work.
No, we have this luxury that we can work from home.
Yeah,
So we do see each other. We do have those little moments during the day. It was not the same before COVID. Before COVID, we wouldn't see each other all day. It was way more stress on the relationship.
yeah,
And then also, after so many years of being together, you build understanding for each other. You build understanding what's needed. So she goes out for sporting in the evening a few times in the week, and there's no complaint like, "Oh, you've been out." No, I've been also out, and we'll make that. We typically reserve the time for us in the weekend. That's really our time, and nothing can change that. Yeah.
yeah,
So we have this good understanding together, and I think that's also important to have a successful relationship as such, because I can try to be with my wife financially independent, but if it's then a divorce along the way, or we're both unhappy afterwards, then what was it worth it? I don't
what's the
live
point?
for the money. I live for the people around me
Yeah,
and myself. Yeah.
yeah, yeah. No, I, my wife is similar, but where she differs is she feels like I'm working too much because I literally get up in the morning. I have coffee, sort the kids, but I will be on my email straight away, just work, 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 and I come home. And sometimes I just can't switch off. And she's like, just relax. So she has times where she takes my phone, takes my laptop, and says, "Okay, that's enough. Just you'll burn yourself out. Go back to it in an hour. Go back to it in the morning. The place
Yeah,
won't burn
exactly.
down."
Yeah.
'Cause I said to her today, I'm taking a half day today. I'm finishing at 10 o'clock. And we're going to record a podcast. And she said, "I believe it when I see it." It's her exact words because every time I say that, I just yourself
Yeah.
when you're in work, you're in the moment, and I don't like to leave something. So it's I
Yeah, but
find that
you have to go into the office. I don't need to. I can work from home.
yeah,
I do go into the office because I go nuts being only at home. But yeah, no. So look, I personally enjoy the present. I would like to do a bit more, seeing a bit more from the world. So that's one of the goals going forward, probably to do a long distance trip. But next year is already booked.
yeah,
Yeah, because we really enjoy going on vacation with friends. So we made already plans. So again, next year probably no intercontinental holiday, which I feel like I'm kicking the can in front of me, and I would love to do this together with my wife and the kids. So maybe the year after.
yeah. You can book. I think you can book 18 months maybe in advance. So just do it halfway through the year, book
Yeah.
it for the year after, and then you're
Yeah, exactly.
and then
Exactly.
and then you're all set. But let's go back to investing and dividend investing. Do you ever doubt your strategy? Do you ever think maybe it's not the right path to take?
Yes and no. I've been so look, sometimes you see these stories about people that got to the goals much faster because they invested in certain assets, whether, for instance, real estate. Yeah.
Yes.
Why not buy apartment blocks or apartments here or condos, as they say in the US? Buy them, make a deal with the bank, get rentals in there, and within 5 6 years, some people can be financially independent. Because I do have the discipline to be on such a path. Yeah, I see that in myself because my savings rate is enormous compared to others here. But we can maybe talk about that later, why that is as well. So maybe I would have been financially independent if I would have gone down the real estate route. So yes, definitely I've doubted about such things. Also seeing others here in Poland, there is often a culture of buying a flat for later. But then every time when I look at this, I don't see the value being generated. The real estate market is really expensive here, so you will purely betting on capital appreciation. And I love the current income. I want things to be cash flow positive from the get go, and not speculate on price appreciation. So these are kind of the things that hold me back. But it's from the other side also good, because I think I know my goal. I know what I need to do. It's just time that I need. Yeah, but that's why um, it's so easy to get distracted, I think, as well. And we saw it in 2021. It was tough at times to keep your head cool. People were throwing money into all kinds of stonks, let's say, tripling in a few months. And then you thought, like, am I the idiot here?
Yeah.
So yeah, I definitely doubt at times, but over the years, my conviction only became stronger, because really, really slowly, I start to see in the fog, I start to see a finish line coming up, in the sense of the crossover point of dividends versus expenses. I would call it slim fire, as they say. So, you know, it will cover the expenses, and that's it. Yeah. But I'm sure that at that point, I will anyway still make money. Yeah, somehow, in some way. So, the doubt is becoming less and less by the year, Derek.
Yeah. And it's probably one of the biggest downfalls of social media is that we have access to everything instantly. If you think back 30, maybe 40 years ago,
Yeah.
dividend investors, you might see one or two people down the road investing in real estate and doing really well, but you don't get the sense of this is how much I'm earning. Whereas now everything is in your face. I'm earning $1 million. I'm earning this, and actually I don't know about you, but even on Twitter, I'm starting to see options trading coming up more and more, and people claiming to earn upwards of $1 million a year on all these ridiculous amounts, and it's easy to fall into that trap.
But there's also a lot of scamming going on. So my favorite YouTube channel from that is Coffeezilla.
Yeah.
And when you watch him, how many people are scamming, you just can't relate it. So I never publish my things online, and that's for two reasons. And one big one of them is safety. Yeah, I just want to live a normal life, let's say, not being afraid of things. But I do publish my annual report where I'm very honest about things. But also, we don't claim quick wealth, quick richness. We're the worst promoters, because we're always saying in the end it's kind of boring. Yeah, if you think about it, we have a passion for it, but it's simple. You just put some money every month into it. So we don't promise such things. So I also don't feel a need to be fully disclosing it, because we're not claiming things around it. We're not claiming so much growth. Yeah, we're more like sharing our journey in the sense of more inspiring, educational, and such. But there are so many scammers out there, and that's why I love what a guy like Coffeezilla is doing. He's really exposing them with his detective job.
Yeah, and I just think it's so important to learn that quickly. And if you see a scammer, then you can start to, because that's what opened my eyes. You can start to see that more and more people are scamming, they're getting exposed for it. You start to eventually put the blinkers on, and you see the same stuff, but you're not taking it in. And I tend to ignore pretty much what I see on Twitter.
That's how when you read those stories, when you see those stories of the scammers, I even wonder like how you can be a scammer. And honestly, sometimes I feel that these people just ran into it. Like for instance, they promised something, at a certain moment they realized they couldn't deliver on it, and started to be caught into their own trap of lies, and then just started building further and further, and they end up scamming people. And sometimes I see them being in denial, and I honestly, sometimes I even believe them.
Like, I don't believe the vast majority of people intend on scamming. There's always going to be some individuals, but I honestly don't believe. And if you look back to Bad Blood with Thanos, what's the girl's name? She went to jail.
I know him.
I can't remember her name, but she started out with a really good cause and something she believed in, but then got caught up in it.
Caught in a web of lies.
Caught in a web of lies, and then so much money, and then so many people were depending on her that she couldn't fail. that
Yeah.
she had to keep going. And she didn't set out to go on that path, but she just fell into that.
Yeah.
And sometimes that can happen. But I think on the other side of it is you just have to be aware, and it's something that I've taught myself is to ignore what other people are doing and
Yeah.
just and focus on, am I happy with what I have now? And if the answer is yes, then
And why
why
bother about the rest?
why
Yeah.
change? If the answer is no, then I need to think about why am I not happy? And
It's really about the joy of missing out.
yeah,
Yeah.
exactly. And if my answer is I'm not happy because X person is earning X amount, then I know I'm thinking wrong. That's greed, and
Yeah.
that's going to lead me
But
down.
I had that in the beginning of my career. I was so jealous of my colleagues that were getting a bigger salary hike or something like that, and really had to learn to not be jealous like that. I really had to learn that the only thing I can influence is my own performance, giving my best, and then I may have an expectation that my boss rewards me for it. Yeah, and if it's not, and I judge that my market value is different, I have a choice to change. I
Yeah,
shouldn't blame my boss. Yeah, at that time, I also should not be jealous of my colleagues if they get more salary hikes or something like that, because I don't have an influence on it, and I can better spend that time becoming better in what I do and adding more value to the company than being thinking about the others and getting into a negative mode at work,
yeah,
and which only gets the cycle downwards, right? As a result.
yeah. I'm not sure how long we've been chatting, but I honestly feel like we could go go on like
We're
this
at
for
15 minutes now,
a,
probably
a
somewhere
couple
there.
more hours. But I do want to touch on one thing. We spoke about having too much cash and all this kind of thing. Do you ever think about giving to charity this time of year, or do you give?
Um, yes and no. I don't like giving money because I think giving money as such doesn't really help individuals in the long term. I mean, if someone really needs something in the short term, yeah, but in the long term, not. But for instance, there are two things that I do. First of all, it's a really easy one. In Poland, when you do your tax return, you can give 1% or something like that to a charity. So via my taxes, I do this already. I even consider my entire tax a charity because for most of the percentages that I pay, I would say I'm a net contributor. So from the tax, what do I get back for it? I live in a safe society. I live, there is a military and everything that's being invested. There's good infrastructure. But let's say half of my tax is probably spent on something that I benefit from. The other half, I
Yeah,
consider this already charity because it's going to others here, unfortunately, because I would like to control where it goes to. Secondly, I'm every year I invest in kiva.org.
yeah,
Actually, my money is paid back. I saw a message 2 weeks ago, so I can reinvest it again. And Kiva is an organization where you can put money, let's say 100 euros, and you give microcredits to, I don't know, a woman who is selling soap in Kenya or something like that, and she then needs 1,000 euros. She buys the ingredients, sells it, and from the sales she buys this 1,000 back to the individuals that all contributed to this. So I'm doing that as well. And then usually here it's more like locally
yeah,
uh, giving something here and there, but not a lot. Not a lot because I'm not at that stage yet where I feel like I can give back a lot. I mean, uh, in money wise, but for instance, what I am doing, and I take my listeners serious, of course, but our podcast is a form of charity. Yeah, because I'm spending a lot of time, not just for myself and for you, but also for others, right? I'm really on a mission to help others take how is it, financial finances into their own and financial freedom into their own, because I believe that as society our retirement system is not sustainable. I also wish that I had someone that could taught me everything I knew today. Yeah.
yeah,
So for me, this and I don't mean this with disrespect, because when we talk about charity, we think about poor children, orphanages, we talk about the elderly, but think about this dogma that we have in society that you just need to work and save and be a good citizen. For me, this is also a form of helping others, and I think the time you and I spent on answering questions, on preparing the podcast, to keeping a blog alive is for me also a lot of contribution to society as a whole, let's say.
Yeah, giving back in terms of time. I think giving to charity is important, but more so local charities. I'm not a
Yeah,
huge
local.
yeah, I'm not a huge believer in the big charities because the money gets lost and pays some executive
I
and
also expect that also even locally that some of that money doesn't end up where it's
yeah,
supposed to be. It is kind of like investing.
yeah,
Sometimes you have a dividend cutter along the way. Yeah.
yeah. I have to give a shout out to my niece. I don't know if I said this on the podcast, but back in June or July when we were on holidays, she wanted to set up her own business, and I said I'd help her do that. So we have a shop online, and it's actually done better than any of us expected. I think our goal. I got her to write down our goals. Our goal was to sell 20 bracelets, right? And they're
Mhm.
€5 a bracelet, and that was €100. She's after making well in excess. She's probably €1,500 at this
Yeah.
stage, from a €5 bracelet. But to Lucy's credit, and she had two missions. One was just she didn't really care about the money. She just wanted to make people smile. I thought that was really inspirational. But
Yeah.
then the second part was she said she was going to give 15% back to charity of whatever she earns. In actual fact, she's given probably more than 50% back to charity. And
Wow.
she doesn't give them money. But for example, over Christmas, there's kids that come from backgrounds and families that will not get toys for Christmas. So there's this Christmas list that's giving out, and then people can buy them. So she went and took our money and went and bought. I mean, I should show you the picture. She has hundreds and hundreds of
Yeah.
these toys, and then she gets to go around and hands them to the kids and all that. And honestly, it's been so inspirational watching her because it's something
Yeah.
for me. I say, yeah, charity's good, but she's actually doing it at 10 years of age,
Yeah.
and it's a big part of who she is and giving back. And I find with Lucy is that she gives so much
Yeah.
that she's getting it back 10 times more, but without even expecting it or wanting it. It just
Yeah.
seems to gravitate back to her. So I think giving back to charity is fantastic. And I have to shout out to my niece. She's taught me a lot in this regard.
On is it okay if we put the link in the show notes?
Yeah, of course, of course. I have
Okay.
to say we
Cool.
won't be shipping to America because the shipping is too expensive. But
Yeah.
we normally ship around Europe and Ireland. It's
Nice. Nice. And then how does it look then for you after retire when you reach financial freedom? Because I can tell you what I would love to do. So let's say that I wouldn't work then anymore for the current job that I have. What I would love to do is with excess cash, I would love, for instance, to sponsor um, people with a bad background financially, sponsor their education or something like that. Like
yeah,
1 or 2 students per year, whatever I can afford at that time, because I truly believe that education is the best path to wealth. And
yeah,
I see too many teenagers around me, or when I speak with their parents, let's say, who are not having a good job, that usually the children follow the path of the parents, because
yeah,
at that time, for instance, they feel like they have to work to support the parents and making having an income, let's say. But there's such a waste of talent at that moment in time, and there's usually a big barrier to giving it a try. So one of my dreams would be to have kind of an my own charity then, which I will probably fund from excess cash and dividends or something like that, to help the underserved, let's call it like that, by providing a few people an opportunity to get a college degree or something like that, and get a more meaningful job than working in a factory.
yeah, yeah. That's a good goal to have. In terms of charity work, I've never thought that far ahead. I know when I get to retirement, I will need to do something. I need to have a purpose because just traveling the world is not much of a purpose. It's nice to be able to do it, and I want to
Yeah,
be able to travel, but I need to have some sort of purpose as well. And speaking back when I grew up in what's probably in my area, disadvantaged area. I don't live there
yeah,
anymore, but it was very disadvantaged. Still is actually today to this day in that area. But what got a lot of us out of there was they had these youth groups, and they took people and you're basically taken off the streets. You had somewhere to
yeah,
go, you had somewhere, and it was simple. You could be playing different games. You're
yeah,
in a safe place. There's adults there that I still talk to today. Actually, they're fantastic people, but it was always something that I'll never forget, because without those, you're on the street more. And then when you're on the street
Yeah,
more, you don't know where you end up. And I look at different areas of where I grew up and where people have ended up. I would say the majority of them end up in jail.
yeah,
So those type of outlets. So I would like to give back in that regard somehow, whether that's with my own time, setting up one, or
yeah.
funding it, or something. But that's probably
And
something.
one of the questions you could ask yourself, because a person asked me that the other day and said, like what would, if you think about purpose in life, like think about like this, what would you need to give to society to get a street named after you?
That's interesting.
That's really about, that was kind of like, think broader than that. Think about how you can really make an impact to your own local community or something like that. But the
Yeah.
mayor of town says like, what, you know what, we need to name a street after this person.
Yeah. I'd need to have it after my full name, because there is streets named after my second name.
Well, but I guess you're living in a city that's maybe declining, so the opportunity for getting a new street name, there's probably a lot of competition.
I think it's a good time to jump onto some listeners' questions. Honestly, sometimes I'm forgetting we're recording the podcast there. I would have kept chatting, but
Thanks for this fire chat. I mean, I see that the fire is also, we need to put another brick on it, but thanks. It was very nice to listen to you.
interesting. A different kind of chat today. Let's jump in. Yoris has asked us, how are you guys going to celebrate Christmas?
Family, lots of food, typical Dutch Christmas, I would say.
Yeah, we're the same, and I don't know about how you guys do it, but it's a hectic day for me, because we get up in the morning, we have our own present exchange in our own house, and we have a bit of fun. But then we go down to my wife's father's house. Then I go down to my parents' house, and then we spend the evening then out at my wife's sister's house. But it's just on the go. The only time I sit down really is just sitting down to eat the dinner, but it's just on the go. But it's so funny, because my kids are so used to it. That's their tradition. And like, as they were getting older, I wanted to not do that as much. I wanted maybe to spend a lot more time on our own, or just go to one place. And they're like, no, Dad, this is what we're doing. This is what we do every year. So they look forward to it. So I have to do it.
So what we do is we just have all family going to one place, and we have one big giant dinner together. So expect 20 plus people there. And yeah, that's for me Christmas. Everyone coming together.
Yeah.
And it saves a lot of trips as well.
Yeah.
And as long as you're not the host, all is good.
Exactly. Yeah. You don't have to cook everything.
And you don't need to spend money on it. Yeah.
No. To be fair, we do. So what we do is quite interesting. Everyone, there's also about 30 people sitting down for dinner, but every family will contribute. So our house.
No, I'm kidding also,
Yeah.
but I'm more like to say like, hey, that's one way of hitting your savings rate.
Hitting your savings. Excellent. Go around to everyone's house over all Christmas. You don't have to buy any food.
Because that's what you made me think when you said like, no, we're going everywhere. I think like, oh, it's eating everywhere, drinking everywhere, and then comes home and looks at his bank account, saying to the wife at the end of the week like,
Yes.
hey, we had a cheap Christmas this year, and the rest of the family is totally broke.
We've used no energy on the house. We haven't been there. We bought no food. I love it. Eldev has asked us, what is your typical Christmas food that you're going to have?
Yeah, it's gourmet style that we have. So it's kind of all kinds of meat, fish, vegetables. You put it in oil, or you put it on a little plate, and you bake it, and then of course the whole house smells. So it's everything you can get in the shop effectively.
Yeah. I mean, the traditional dinner over here is turkey and ham, but leading up to that, you have starters, we have soup, we have chicken about pates, we have like there's a range of stuff. There's probably about 5 or 6 different starters. You're nearly full, so you nearly have a starter. We need to take an hour or two break and then go back for the turkey and ham. But it's fun.
Nice.
Kay Jansen, what is your allocation strategy and how does your tier system work?
Yeah, so I think he's referring to my article on my blog, right, about allocation strategies. So It's literally 4 tiers. So my allocation strategy is driven by the fact of like, what would be the impact if I have one dividend cut in my portfolio? So let's say my target is to grow my dividend organically by 6% each year. So I wouldn't like my dividend to be exposed more than 6% per year of my portfolio. So generally speaking, if you're a tier one company, you shouldn't have a position size or a dividend dependency, let's say, of more than 4%. Tier 2 is 3%, tier 3 2, and then tier 4 1%, which kind of limits the impact of me making a mistake in my investment decision. Yeah, so it's all about sizing, and it has done me well so far. I mean, it's not a scientific methodology, right? I'm also in the accumulation phase, so I think my biggest position is probably 7 or 8% at the moment, but it's my target allocation size. And I think that's also important to understand, because it's not a flat line of building a position or building a portfolio. For instance, this year, the biggest opportunity were in the insurance sector and the real estate investment trust sector. So far, in zero interest rate environment, I had no REITs really in my portfolio, only Omega Healthcare. But this year, I bought a lot of realty income, and Agree Realty as an example, because this year, this sector was very attractive, and other years it was staples or something like that. So I don't build a portfolio by investing, let's say, in 40 stocks at once in a single year. No, I build it up over time when opportunities arise.
I, I, I think he's asked also if we could put that in the newsletter, but I don't think there's any need because you have this.
I have it on the blog, yeah, but I
explained
can put some more thoughts about it in our newsletter. So for people that know what we mean here, we have our premium newsletter here, 119 euros per year, 20 newsletters, also a lot of dividend stock cards. We have now 17, but we're adding 2 or 3 each issue. So I hope after a year we will have 100 stocks covered with our investment thesis and everything.
Yeah.
So this is what he's talking about. In there, we have typically subscribers corner and a newbie corner where we discuss all kinds of relevant topics that we have.
Jean Christoph has asked us about how we feel about our positions when they are well in the green. They find it difficult to add to this position when they are well in the green, but can add to them gladly when they're in the red position.
Yeah, this is for me one of the hardest, because it's all about price anchoring. We know what price we paid for it. We are anchored at that price, but sometimes these prices never come back. And I'll give you an example where I've been averaging up a lot is on Johnson & Johnson. I bought first Johnson at 100, then at 120, then at 150. What for me has helped over time is to have an indication of what the fair price for the stock is to pay. And then just look at that price and be anchored around the fair value, and only evaluate it from time to time, or when an event happened and you see like, oh, wait, reevaluate, is it still the same fair price? And then look at that, and it's then worth buying it. It helped me a lot in averaging up. Otherwise, I wouldn't been able to do that, as an example, in many of the stocks that I own. I had to learn this. It's very, very hard.
Yeah, it's tough when you look at your portfolio and you're looking for something to buy, and you see you have one that's well in the green. Sometimes it's going, oh, that's overvalued, too expensive. I don't want to buy that. So I think you're bang on the money. I think you need to look at the fair value, nearly ignore what you have, and think about, if I did not own this company, what price would I buy them? And I think that's the mindset you need to.
And ignore the price chart as well. Ignore whether it's at 52-week highs or 52-week lows. Ignore it. I mean, I maybe if you're good at technical analysis, I think there's a strong case for considering it, but I'm not good at it, so I ignore all this stuff.
Yeah,
really look at only at the fair value point. I say this, but I do still not always do this. I think, I do still struggle from time to time.
Yeah, I'm the same. Alexandros has asked us about the biggest surprise this year in the market.
So I wasn't really surprised with the rate interest hikes. We saw those coming. Yeah, we spoke enough about it. I was just so surprised how much it hit certain sectors, like the real estate sector. Like, guys, if you just follow the stock market, we all knew that this was happening after COVID. We were one of the first podcasts out there that was seeing in the Kimberly Clark results that inflation is starting to hit us. Yeah, here, and then generally the ABCs are that often interest rates will need to be hiked to fight inflation, and then still that the stock market is surprised behind it, and because the stock market mainly adjusts pricing once the interest rate is a reality.
Yeah.
It also shows that we are not talking here about the efficient market, yeah, because otherwise you would argue it's priced in. So I was surprised how fast it got beaten up. That was
Yeah.
what I was most surprised by,
Yeah.
because it didn't reflect the reality, yeah, as such. When you look outside, let's say,
how fast even certain companies declined. You look at VFC, for example, VFC
yeah,
Corporation. It seemed like they just got into trouble super quick. Bang, cut their
yeah,
dividend, cut it again. It took its toll on a lot of companies quicker than I expected as well. I thought it'd be more prolonged, but then we had the tech stocks that just are resistant to all this. It's like
yeah.
they're in their own little bubble, just singing
Yeah, I
along.
must say AI, artificial intelligence with ChatGPT, I have a feeling that we are experiencing something that my parents experienced in the 90s with the introduction of the 14K modems in the internet. Yeah, first time websites. I have a feeling that we are experiencing this now with AI. The impact of ChatGPT, I see it already in the workplace. I mean, the automation that's possible now, the cost reductions that are possible now, is unheard of. It's
Yeah,
really unheard of. And where I think the revolution has started now in AI. We've been talking about it for a decade, but now I see the impact to what it can do to companies' efficiency, but also to the impact to society.
yeah,
Not everything positive. So
yeah. I can see them in my workplace. So, automation engineer, but I'm heavily involved in vision, and one of my key tasks for next year, 2024, is I have to introduce AI into some of our vision systems. I've been working on this for
yeah.
18 months. It's not going to just happen, but
Yeah, but 18 months ago, we didn't know about these large language models and that it could be so powerful. And AI was still something like, yeah, overpaid people that work on this.
yeah,
Yeah, but now it's like, shit, look at this stuff, what it can do for us.
yeah. We've done lots of trials, lots of studies, and lots of comparisons, and it's mind blowing. It's honestly, some of the vision systems we have. It's very intricate. Um, eh, it's borderline pass off. Like
Yeah,
it's borderline to say pass or fail, but these models, the larger we get it, the more data we give it. It just seems to like
yeah.
it's going to save us a lot of money. A
And,
lot of
and you know
money.
what the nice thing is? You don't need to be, how I say, with AI, what we had at the time of the tech boom. Remember the 2000 that
Yes,
everything went into the sky? But look at the companies that were still invented later because of the internet. Think about
exactly,
Facebook. Think
exactly.
about all those companies that only exist for 15 or 20 years in the aftermath of this. So all I'm trying to say, like now, as an investor, we don't need to now be like the hero and discover this single AI stock that will make a difference. You know what is even the nicest? We can let it play out the market. And then once a winner really rises,
Yeah,
start investing in it. And yes, it means that you may be a little bit late, but look at Apple, look at Microsoft.
Google.
Yeah, there's a long tail there typically. And for instance, Google was not the first search engine. It
Oh,
was
Yahoo.
Alta Vista.
Alta
Yahoo,
Vista. Yeah,
Alta Vista. Yeah, yeah, yeah. So all I'm trying to say is like you don't need to take the first mover. Yeah, you can take also the one that later really gets it right. And I still feel like, and when we look at AI today, we're talking here more about the inception of those first companies here, like OpenAI, but hey, Microsoft has a stake in it. So um, yeah, we don't need to be heroes now, and we don't need to fear of missing out. A lot of compounding in this space is still ahead of us.
100%. Yeah, 100% agree. And actually, when you were speaking earlier about AI, it was my first thought was linked back to Google. You don't have to get in straight away. There'll be time. There's always
Enough
time.
time. And those companies are probably not even publicly listed either.
They're probably not even created yet.
Exactly. Yeah, there's someone now walking around with an ID thinking like, no, this is too crazy or something like that. And then one day finds the courage
Yeah.
and builds this business and will be the next $1 trillion company.
Marek has asked us, what do you think? What stocks will you hold in 100 years for sure?
Ooh, 100 years from now, I find this one so hard to answer. I
I,
find it really hard to answer.
I think if you look at because I did Carlsberg, right? I think if you look at
Yeah,
companies like that, for sure they'll be around in 100 years. Why?
yeah,
People drink beer, people drink
exactly.
wine, people drink vodka,
Yeah,
and I think those type of companies will definitely be around in 100 years.
I think so. I think also something like L'Oreal.
Yeah, L'Oreal.
I think women will want to stay beautiful. Yeah. Even the Gen Z generation that sometimes doesn't use makeup at a certain moment, they will get to this age that it's not anymore the nice cheeks, but that they need some support to lift it up.
Yeah,
So L'Oreal will continue, I think, also for the next 100 years. And no offense to French people, but they don't like being taken over by other companies internationally. Yeah, they're very patriotic.
yeah,
So I believe that a company like L'Oreal, I never see them being acquired. They are already at the size that nobody can acquire them as
yeah.
such.
So big.
The only thing that can happen there is that the family screws it up themselves or something like that. Yeah, you have this woman still in the board there. Yeah.
Yep. Andrew has asked us, when you're doing your financial calculations by the company, do you always do it from scratch yourself, or do you rely on some tool or website to assist?
Well, in this case, I've got my own G sheet, or we have our own calculator to do it, which we created ourselves. But I don't need to rely on other websites and tools. I also don't trust other tools as such, when they have data already pre-populated, because I don't trust the European data. That's also, again, what we are trying to do with our newsletter or the Dividend Growth Compass service, is to build this database with correct information, right? Because we see it in all the APIs we have been evaluating. The European data is very poor, specifically when it comes to quarterly earnings. You
Yeah.
cannot really trust them. So simply said, Andy, I have to do my own calculations, because otherwise I will be doing it based on wrong data, and that will lead only to trouble.
Yeah, it's actually, now that we're doing it more and more, pretty much all the time now, it always makes me wonder about these websites, because they must pick certain values that are generic across everything.
Yeah.
So how
Yeah.
else are they able to do it so
Yeah.
fast? So, and we know that's not always the case. We have to calculate the terminal values, the discount rates,
Yeah.
all these different factors play into it. That is just not just easily taken from a direct number all the time.
Yeah.
So it's I think it's
because it's more about forecasting as well, right? You need to
Yeah.
understand the business. You need to have a feeling for the market. You need to have a feeling if there's, for instance, a trend going on and wider in society that this company has a strategy for. Then, because based on that, you can consider your discount rate, you can consider your growth assumptions, you can consider your terminal value if you do a discounted cash flow analysis. So, some people say it's an art more than science, and it is, but it's also not just purely luck or guessing. Yeah, you do your homework. Yeah, so at least you limit the risk. You downsize the risk of being wrong, but you can still be wrong. Yeah, so I think if you really want to invest based on a value, taking valuation into account, you need to inform yourself about those things.
Yes.
And yes, I do read opinions of others, which helps me, but in the end, I am accountable for it then. So I need to make the right judgment. But these automatic websites that I sometimes get screenshots from, like, oh, you say like this, and for instance, Ahold is fair value of 35 on this website, and then I see it's kind of an AI. And here we're still talking about dump AI, to your point, using the wrong input parameters. It means nothing to me when I
Yeah.
see this. It also doesn't disclose based on what they do it, and as such. It's just a formula that for some companies works well, but for many other companies not, because you don't, for instance, you take free cash flow, but oh wait, it's an insurance company that doesn't really work on free cash flow like that.
Yeah. Yeah, I would much rather be wrong knowing I put in the work myself
Yeah, exactly.
than looking at a website and still being wrong, to be honest with you.
Yeah.
Ron A has asked us, do you ever regret selling shares that you've gotten from a spin-off?
No, because I don't remember really getting spin-off shares. I mean, I had one
Realty
Energy
Income.
company one time for Siemens.
Realty Income spun off Orion, wasn't it? He got some shares from that.
Oh, I think I sold them. I don't
Yeah.
know. Yeah, but I think for me the Iconics spin-offs were probably, what is it, Philips and Altria,
Yeah.
Abbott Laboratories and AbbVie.
Yeah.
But I never had this in my portfolio, so I can't really judge. Yeah.
Mick has asked us, he's finally back into the green after a year of red. Like us all, Mick. He's enjoying DCAing into his stocks when it's back to the green. But I suppose it's a long question, but what he's trying to ask here is, while he's in the green, should he continue to invest regularly and average up, or is it the wrong time to invest? Should he wait for it to come back down?
It is a rhetorical question.
Yeah.
Yeah, so Mick knows the answer already. So the question back is like, why do you doubt, Mick? Because it seems you know what we would answer, probably listened enough to us. So yeah, I would just, because for instance, we were just talking about averaging up, how difficult it is. DCAing is also one way of avoiding being price anchored, because averaging up is hard. And I mean, okay, let's talk about Microsoft. Imagine I bought Microsoft around in the low 40s, right? At the time. And then I bought one more time at 80 or something like that. Imagine if I wouldn't have done that.
Yeah.
Look at how much money I would have missed.
Yeah.
There are many of such think about Johnson & Johnson. Imagine if I wouldn't have bought them in the green. I would have lost so much opportunity.
Yeah. Exactly. As you said, I think you know the answer. We've spoke about this before. It's hard. I know it's hard, but it's just about reshaping your mindset, I think.
I think what Mick needs to do is just stick to a strategy for, let's say, 2 years. Give yourself 2 years for strategy, and let it, and then evaluate after 2 years how it did. And 2 years is even a short time horizon, because if we now enter a big global recession next year, stock market crash, I think then you shouldn't evaluate it like that. Yeah. But give yourself 2 years and see how you did with averaging up, whether you feel like across the board it was a mistake or not.
Yeah.
And I think he will be thankful that he did it, because he will have seen that strength just continues to grow, and you should buy into strength. It's sometimes even better than buying into weakness.
100%. MH79 has asked us, do you ever use fear and greed indexes to get in general stock market valuation?
No.
Nope, I don't either. We've got a couple of questions from Eldev and Kajolas asking us about bonds. Have you ever considered to park cash, or are you 100% long? And then there's a couple of tickers there for bond ETFs.
Yeah. So I have considered buying bonds. I'm still considering sometimes. But at the moment, the saving rates on my account when I put them in a deposit for a few months also give me 5%. So if I then take a bond also for 5%, it's too much trouble for me to figure out which bond and everything. Also, then you have still, how I say it, if you take long bonds, long duration bonds, you have still a significant risk on losing capital gains, let's say. So for me, in Poland, we get 5% on the stock on the savings account, and probably even more in some areas if you find the right bank, which is much better than in the Netherlands. I still have a little account in the Netherlands where I get 1% or something like that. It's, by the way, a scam what banks are doing in the Netherlands. They are not passing on the interest rates to the customers, and customers in the Netherlands are just saving oriented. They complain, but they don't switch banks. They don't punish banks for not doing that. For me, it's a scam, because those banks have been bailed out so often. They get one fine after another for the let's say manipulation of the currency market or something like that, and then they continue paying 1% or something like that on to customers. I really find it's criminal almost, because banks are not normal capitalistic systems. They are heavily regulated, depend on bailouts when shit hits the fan. and then they are now just giving 1%. Like, what is this? Yeah, clearly there's too little competition in the Netherlands in the banking system. These companies shouldn't exist with these rates.
Yeah. Also, listen to episode 172. I think we
Yeah.
spoke about our thoughts on bonds on that as well.
Yeah.
Daz Mikey has asked us about how we categorize stocks. He does it in a couple of different buckets. We spoke of buckets before, but he has low growth, high dividend, decent growth and dividend, and then low dividend and high growth. As he gets closer to financial independence, he'll probably focus more on income and decrease growth. What do you think? Do you do something similar?
I don't categorize like that, but I do have it in my mind. So I do want, when I say high quality, I would like more lower growth, lower yield, high growth, for instance, than high yield, low growth. So I do have it in my mind, but I'm not, let's say, having a categorization of allocation percentages behind it. I think it's a nice exercise for me to do maybe one time to classify my portfolio. Shouldn't take more than 20 minutes, so maybe I'll do it.
Yeah,
Thanks for the inspiration, Mike.
I did it at the start of last year, and I don't look at it throughout the year, and I'll do it again maybe at the start of this year. But I'd probably follow a similar path. As you get closer to FI, you need income, so you'll prioritize income over growth. But we'll see. That could change. I'm a long way off that yet.
Yeah.
Dividend Dad is from Sweden, and he is wondering about having the majority of his portfolio in dividend ETFs. He understands that the growth year over year isn't positive sometimes, but overall the 10-year period has a dividend CAGR of 6 to 7% per year. What are your thoughts on this?
So my issue how I evaluate my holdings is like, imagine I'm living off of this income, and imagine that your income expense ratio is 100%. Would you like a year of dividend cuts in your portfolio? Loss of income. Now, I don't know what the average volatility is in the dividend income from ETFs for his portfolio, but if it's 10%, it's probably you can deal with it. If you have somewhere a bit of a margin of safety, then it's probably okay. But if I look, for instance, at the dividend ETFs that are paying high dividends in Europe, those are typically having a flat dividend income for many years. But then, for instance, 1 year is €4, the next year is €5, but it's always floating around between €4 and €5.
Yeah.
So you don't get growth or anything either in return. So, but if the 10-year CAGR is 6 to 7%, then I would be interested for a small percentage of my portfolio if the yield is at least 3%, because then you get like a 10% annualized return. Otherwise, it's not worth it for me. And I think there's the FUSD, but the Dividend Aristocrat ETF, UCITS, right? I think it's FUSD, but then probably it yields only 1.5%, and then getting a 6 or 7% CAGR is for me not worth it, because it takes so many years to get to a decent income. Yeah.
Jan has asked us, what quality stocks did you buy this year that you were really happy with, and what opportunities did you miss and regret?
I'm really happy with Agree Realty.
Yeah.
I see there's a high quality real estate investment trust. I'm really happy with my ASR position, the insurance company in Netherlands. I see it also as high quality. The one that I missed, I was at a certain moment this year, I was looking at Visa, and I should have bought some. I should have just initiated the position. So that's the one that I probably regret a little bit. I don't have too many regrets.
Yeah,
sometimes.
I don't have any regrets, actually, because the market gave us so many opportunities. But the one stock I'm really happy with is CRH, the Irish construction company, particularly with they were on the London Stock Exchange, and I felt they were really undervalued compared to their peers, particularly in the US. Yeah. Then they've changed to the US listing, and they're now catching up to their peers. So in a short space of time, they've become one of my most successful stocks, I think.
Wasn't this the stock that I was telling you every time, Derek?
Yes.
Have you read about CRH already? When will you look at CRH, right? And
Yeah,
then I almost forced you to look into it, and then you started to like it. Yeah,
yeah,
nice.
yeah. You twisted my hand. That and DCC. Although I don't have
Oh,
a whole lot.
DCC did well, right, this year.
Yeah,
It
yeah,
popped up after the last earnings suddenly, and it's now, I think, at 15% in the plus or something like that in a single year.
yeah.
It was good because I needed a bit of confirmation of my investment thesis.
Yeah. I didn't buy enough DCC at the time. I know I bought a starter position, but they always kind of just hovered there, and I keep
Yeah.
forgetting about them. But like you, yeah, I was only looking back recently. They've done well. Blackstone has done quite well for me as well, buying them at a certain price. But CRH is, if I was to pick one, high quality that I'm really really happy with, I'm happy with that one.
Nice. Nice. By the way, I didn't buy CRH myself, right?
No way.
Because it was about cement. I don't have a feeling for the business, but all the stuff what I read about it and what I analyzed showed this is quality.
Yeah. Vince has asked us about our take on Signify, and before you answer, I have to apologize for Vince because he wrote to me on Instagram, I must say, about a couple of months ago, and I've only seen it now. So I've promised him we would answer this question today.
So Signify is a spin-off from Philips.
Yep.
As you know, Philips is a horrible company from performance. They got again a litigation, I believe, or recall, something like that this week. So it's fun again. But Signify is the former lighting division from Philips. Very low value typically, a very low multiple typically as well. I mean, I think it's now, according to Google, it's like a 16 multiple. It went up, I must say, over the last month. So it was trading at a certain moment at 23 euros in October, and it's now 30 euros. So it really, really bounced back. Look, what is nice about this company, it's still generally generating cash flow, earnings, but the stock market generally considers company like kind of old industry or something like that. Yeah. And so it doesn't reward this company very well in the multiple here. But it's also a really nice dividend payer. I think, what is it? Since it's a spin-off, it has done pretty decently. And I like it. Actually, I've been considering sometimes it is this company that pops up from my radar and never pulled me into buying it yet. I think it has a forward dividend yield of almost 5%. I think the dividends, I mean, I haven't done a full safety assessment, but I consider it relatively safe. It's not the strongest. But, then I go to the shop here, to the Castorama, which is this French kind of Home Depot. I go there and I see, and I ask for a good quality lighting, and I look at the producer. It's Signify.
Yeah, of course.
Yeah.
I'm not one bit surprised at that.
So for me, it's still one of those. It's probably the company with the best lighting solutions in Europe, at least from what I can say. So and we need lighting.
Yeah.
We need lots of lighting to improve our safety on the roads, wherever it is, in the tunnels. We need smart lighting. This company has it all.
Back in my days when I was on the tools, Philips was always Philips lighting, as it was. It's no Signify, but Philips lighting was always top off the range. So if someone had money to spend, it was good, and they were really early in the automation side as well, and it was always top quality. What I do like about them is they also have a clear dividend policy where they want to increase the dividend year on year. So they are committed to that. They have a decent history of paying him since the spin-off. So yeah, like you, it's a company I know, it's a company that I like, but it's a company that's never been on my radar. It's just never
It's been
up.
even on my radar. I just never pulled the trigger because usually when I look at it is when they are again at a 16 or 70 PE, and I see that there are sometimes opportunities to buy this company at a 10 PE or something like that, or 11 PE. Yeah, so maybe I'm price anchored probably around the multiple, but high quality products, I would say, not the highest quality business, probably have decent quality. So you want them at an undervalued price, not at a fair price. That's how I look at this.
Yeah.
I can see this ending up one day in my portfolio.
And then the last question of the day goes to Simon. And Simon has asked us, which dividend stock purchase would you put on Santa's good list, and which would you place on Santa's naughty list?
Yeah, I don't know what we mean with naughty list, because I don't know any stocks that are listed in the sex industry or something like that. Would be interesting if there's like a ticker symbol come or something like that. Maybe we should try it. I think I did one time look into those naughty ones. Um, I really don't know. What about you, Derek? Help me out here.
Yeah. In terms of the good list, I think we spoke about that already. Which ones we're really happy
Yeah,
with? CRH is
yeah,
top of the list. Which ones are on the Nord list? Honestly, this year I'm not too concerned with anything. I didn't buy any AT&T, didn't buy any Walgreens or Intel or
yeah,
those types of companies.
yeah.
It's really been insurance.
Oh,
Insurance.
buyer,
Um,
buyer. Oh,
did you buy some this
buyers. No, I didn't buy, but I held it, which I
year?
shouldn't.
Yeah,
30 euros now. And again, what was it? They lost again a litigation or something like that with Roundup. It's like this poison cup just doesn't finish.
yeah,
It's so I think it will stop when the company is at zero. I mean, sometimes that wondering, like, is this company just with Monsanto going all the way to zero?
yeah.
It's still cash flow rich, but if you see what they need to pay, it's effectively every cash flow that comes in is a check to the victims of cancer and such.
I'd actually love to go back and listen to our podcast, the worst acquisition in history. I can't remember what year or
Yeah,
season or,
yeah,
or,
yeah, yeah,
or number it was, but I'd love to go back because it's probably 2 years ago, and I
yeah.
don't see anything has changed in that time.
Yeah, and we have a listener. His name is Miwa. She wrote to investor relations there. He shared with me the email complaining about the governance and such. And you will not believe the response. They did an evaluation of the board and its governance and such, and they felt like the acquisition related was all done well. Due diligence was in place and such. And I think, like, yeah, this is the typical situation of a doctor saying, like, well, the surgery was successful, but yeah, sorry, patient
Yeah.
died. But no, the doctor did everything according to the procedure. Yeah.
Somebody's done a Pew Matrix somewhere along the line, and they made the decision based on that to buy, and they're sticking with it.
Yeah, but this is what I mean, right? When I hear such an evaluation, it should be more a performance evaluation,
Yeah,
because why would someone do? I mean, what is then the expectation that someone did fraud?
yeah,
Yeah, yeah. We trust our CEOs to make good decisions and to follow a certain logic in decision making. But that's not why they are CEO. They are CEO because they were outstanding, and not about, I said, following a certain logic in decision making, but being right most of the times. Yeah,
yeah,
specifically when it comes to investment decisions about 63 billion. Yeah, and if they make these investment decisions, they earn across their tenure as a CEO many millions plus stock option
yeah,
reward schemes that they get heavily compensated for the risk. But then when it doesn't play out, we don't see the clawbacks happening. We don't see the punishment happening. So for me, it is a kind of almost a form of subsidy that we're giving to CEOs, but there's no downside risk other than getting fired. And that didn't even happen at Bayer. The guy didn't get fired. He kind of stepped down.
yeah.
But
Move,
hopefully there was enough pressure around it. But there was nothing here like that really made clear, like in the communication, like, okay, fine, thank you for the last 6-7 years, but you screwed up. So we need to have a better CEO. Yeah.
And that concludes our Christmas show. We ended on a Christmas cheery note.
Yes,
Okay.
yes, yes. We still have a lot of questions about many
Yeah,
stock
we do.
tickers. We'll pick them up in the future. We
No,
just simply can't get to it. This show is already more than 1.5 hour. We hope really people enjoyed our fire chat. We went a bit deeper conversation this time. So, but
yeah,
that's the spirit of Christmas, right?
yeah,
And
of course.
Derek, to you, please enjoy your holidays. I know you had a tough weekend behind you, so enjoy your holidays and spend time well with your family. And I'm really looking forward to the live show next week
Yeah,
with some of our listeners.
yeah, me
Happy
too.
Happy holidays, Merry Christmas.
Same to you. Many happy returns, and to all our listeners, if you listened this long, thank you so much. And I hope you and your family have a nice, safe, and healthy Christmas. And we will see you all soon. Remember, both of us at Dividend Talk are not certified financial specialists through formal education. We are just two guys sharing our journey for inspiration and entertainment purposes. Hence, this is not investment advice. Although we do our best, we can't promise that the information discussed is always correct, nor appropriate for you or anybody else. We always recommend that you do your own due diligence and be accountable for your own choices. As we always say, you can't borrow conviction from others. Last but not least, by listening to our podcast, you agree to hold us harmless from any ramifications, financial or otherwise, that occur to you as a result of acting on information provided in this podcast.